In this video today, I am going to debunk 10 myths about taxes that you may believe, you may not, but you'll find out in a minute. Let's get it. Welcome back, everyone. My name is Nate, and I'm here to help you master your money. So I hope you all are doing well, I hope you're feeling well, and I hope you're ready to talk about taxes today. Now, I know this is not the most fun topic on the planet, and honestly, it is probably the least fun topic on the planet, but it needs to be discussed, and some things need to be cleared up because there's quite a few myths out there regarding taxes. And in case some of you don't know, my main job right now, aside from being a YouTuber, is being a tax accountant. I also do auditing as well, but a majority of what I do involves taxes, and there's many myths I've seen out there roaming about that need to be put down because unfortunately many of those are wrong and people are getting themselves in trouble with the IRS, which is a place you never want to be. So let's get this clear right off the bat. This is for entertainment purposes only and is in no way tax advice. If you are looking for tax advice, please seek out a licensed professional. So yes, I am a tax accountant, but I am not a CPA as of this moment, so let that be clear and understood. Okay, so moving right into the top 10 tax myths that I'm gonna debunk today, and most importantly, how you can smash the like button for the YouTube algorithm and subscribe to the channel. And if you have not done so already, we're having a crazy Christmas giveaway, okay? Hear me out. I'm giving away 5 free stocks. Well, I'm not giving away 5 free stocks, but 5 free stocks are being given away right now, and I'm gonna let you guys know where you can get those. So if you go down to the description, there's gonna be 2 links. One is to Robinhood, one is to Webull. If you go sign up and make an account with Robinhood, they will give you 1 free stock. And if you go through the link for Webull and set an account up with them and deposit $100, they will give you back 4 free stocks. And in total, in combination, this is gonna be worth $32. And that is gonna be my holiday gift to all you guys, so please enjoy. And moving right along to tax myth number 1, and that is gonna be filing taxes is voluntary. So in this instance, the term voluntary actually refers to an individual's responsibility to determine what their tax liability is, but it is not saying that paying taxes and filing taxes is voluntary, because it's not. So unless you have a legitimate excuse, it is not fun or cool to get cute with the IRS and send them fun messages, because they will get you. Don't you worry, if you mess up, they will find you. Myth number 2 is that you can claim your pets as a dependent on your tax return, which, news break, you cannot do this. No matter how much you love your pets, you cannot claim them as a dependent. And even though technically more than half of their support is generated by you, you still can't claim them as a dependent because of the sole reason that they're not humans. So even though this one may seem obvious, hundreds of people every year try and do this and they get caught. So don't do it. And that will get you on the IRS's bad side forever, and you don't want that. So don't do it. Don't even mess with this one. It's funny, but it's not funny, so don't do it. And moving on to myth number 3, and that is that the IRS is obligated legally to file a return for you if you don't. While the IRS does have the right to review the information that you give them, sitting on your couch and doing nothing is not going to get you anywhere. So in a similar way to myth number 1, where it says filing a return is optional, this myth actually stems from some verbiage that says that the IRS can, on your behalf, file a return for you if they suspect you're committing fraud. So unfortunately, this in no way means that you're off the hook from having to file a tax return on your own. Okay, so moving on to number 4, and this is kind of a fun one, I think, because I was actually curious about this up until a few years ago when I found out that money earned from illegal activities is not taxable, which, believe it or not, as counterintuitive as it may seem, that's not true at all. So breaking one law does not mean you get to break another by not filing taxes and claiming income that you earned on them. And so reality is, income acquired through illicit means is still taxable income no matter which way you think about it. Now, for tax compliance purposes, the IRS doesn't care if you're robbing banks, selling drugs, or defrauding investors of millions. All they care about is that you properly reported on your tax return. That is it. Okay, and moving on to myth number 5, and that is that claiming a home office deduction will get you an instant audit. So at one point, there's actually a time when this was actually pretty accurate and many people got audited just because they took a home office deduction. Well, things have changed quite a bit, and due to the increase in prevalence in home office use, and also due to this year having forced almost the entire workforce to work from home, the likelihood of you getting audited for using this deduction is significantly decreased. So next time you go to file your taxes, do not worry about claiming this deduction. In fact, you should be taking all the deductions that you possibly can to help lower your tax liability. Please consult a professional on what you are and are not able to do before you do it, just so you don't get yourself in trouble. And I guarantee you that it's significantly cheaper to pay a CPA for an hour of his time than it is to hire a tax lawyer and deal with the IRS directly. You don't want to get there, so take proactive steps up front, talk to a professional, and figure out your tax game plan. Okay, so moving on to myth number 6, and that is going to be that students don't pay taxes. So this myth actually does have some truth to it. So if a student is a dependent of someone else and they made less than $12,400 in a year, specifically 2020, they would essentially have zero tax liability. But wait, before you skip ahead, it is usually in the best interest of the student to file their taxes in that year, because if their employer withheld any taxes from them, they will be getting a refund check back for those taxes if their income is under $12,400 for the year of 2020. Moving right along to myth number 7, and that is going to be that money earned online is not taxable. So this myth is just plain false, and it's pretty easy to see why. Typically, when you make money online, you don't fill out a W-9 or anything like that to record your income. And because of this, most people making money online have to self-report their taxes and their income to the IRS, because otherwise they won't know about it. And in the eyes of the IRS, money made online versus offline is the exact same to them. So regardless of where you do it, if you make over $400 in a given year, you have to report it on your taxes. And now for myth number 8, and that is going to be, I don't make enough money to get audited. So in my opinion and experience as an accountant, this is the most prevalent myth of all the ones listed on this list. This one is the most common. But the reality is this: while the IRS does look at many, many factors, income is one of them, but it's not one of the main factors. There are significantly more higher tiered, higher ranked things that they look for first before they look at income when determining if they're going to audit someone or not. So across the board for basically everybody, there's an average 1% chance of getting audited for everybody. But if you make over $100,000, that increases slightly. And so the absolute best thing you can do for yourself if you do get audited is to keep records of everything you claim on your taxes for at least 3 years. Moving on to myth number 9, and that is going to be that my accountant is liable for any mistakes. Whether or not you hire an accountant to help with your taxes, you alone ultimately are the one responsible. So instead of assuming that your accountant did everything perfectly, it helps to have a little tax knowledge so that you can personally review the return before it's submitted. And in many cases, your accountant will help you out if you get audited by the IRS, but ultimately, the IRS is interested in you, not your accountant. And lastly, myth number 10, I did not make time for my taxes. So having already covered that taxes are not voluntary, there should be no more question about whether or not you need to file or not. With the massive amount of options out there for filing, with it being easier than ever before, there is now no more excuses, and you can no longer say, I didn't have the time. No one enjoys filling out taxes. Well, no one normal. So that has been the top 10 tax myths debunked right here on my channel. And if you have not done so already, please smash the like button, subscribe. And if you have not gotten them already, there's 5 free stocks down in the description. And in case you don't know, that offer from Webull is only good for a little bit longer. So go ahead, jump on and get your 5 free stocks in total, but definitely get Webull. That's the best value you're gonna get. This is literally free money, so please take advantage of it while you can. And with that said, that's it for me for today, and I'll see you guys next time. Bye.